Vegetable oil markets have had a strong start to 2026, with prices rallying on the back of biofuel policy shifts, higher crude prices, and growing weather concerns in key producing regions. But with high palm oil stocks and increasing soybean supply, the big question is, how sustainable is this move? I'm Johanna Bota, and to break it all down for us, I'm joined by Isabela Garcia, Market Intelligence Analyst at StoneX. Welcome back, Isabela. Nice to see you. We've seen a strong rally in vegetable oils during the first quarter. What's really been driving that move?
Yes, exactly. The beginning of this year was quite positive for vegetable oils overall, and we can break down this movement into two different phases. The first one is related to regulatory developments that supported the biofuel sector in the United States. So there were several decisions that were supposed to be confirmed by the EPA back in 2025, but ended up being pushed to early this year. So for the first quarter, market players were trying to get ahead of things and figure out what the agency's final call would be for the biofuel sector. And there was a few open questions on the table, like the RVO targets for 2026 and 2027,
hmm
the relocation of small refinery exemptions, and the 45Z credit. And one by one, through the first quarter, these open questions got answered in a way that was favorable for biofuels, and they raised expectations for higher vegetable oil consumption this year in the United States, especially soybean oil. So that's why we saw a strong spike in soybean oil prices on the market, which ended up pulling other vegetable oils at higher as well, like palm oil. And the second phase that we can trace back in this first quarter was driven by fundamentals from the oil market.
Okay.
So in March, with the outbreak of the Middle East conflict, crude oil and diesel prices got uh, higher prices, right?
hmm
And there is a pretty strong correlation between those commodities, diesel and vegetable oils. For example, when diesel's price go up, biofuels become a more attractive alternative for the consumer,
Of
which
course.
supports production and in turn drives demand for vegetable oils as a feedstock.
hmm
So the connection between the energy market and the veg oils market was already there, and through March got an extra boost for the risk premium tied to the Middle East situation.
Okay, let's take this in order and start with U.S. biofuel policies. How significant are they for soybean oil demand going forward?
Yes, the RVO target was highly anticipated by the market because it's a key driver for biofuel production in the US, especially for the biodiesel and renewable diesel category, which is the D4. The target jumped much more than the previous years. So for 2026, the APA revised upward by 61% compared
hmm
to last year. So it's a pretty significant push for the biofuel sector in the US and is tied directly to production, with the US Department of Energy itself projecting roughly a 22% increase in biofuel output compared to last year in its reports already. And that will leave the soybean oil balance tighter this year in the US, since soy oil is an important feedstock for the biofuel chain in the US. And sure, there are competing oils and other feedstocks, but soybean oil is generally among the main feedstocks in the biofuel sector. And the expectation of a tighter balance pushed the market prices up, essentially because it understood that the US soybean oil balance would tighten once the APA confirmed the targets, which happened late in March. And there were also other important regulatory steps, the 45Z credit and the small refinery exemptions reallocation. And as I briefly mentioned, the reallocation basically brings back into the market some of the demand that has been exempted over recent years. So players will need to blend biofuels, making up for part of what hasn't been done in the
hmm
previous years. And on the 45Z credit specifically, there's a regulatory framework that ended up favoring and supporting credits for by refineries using specific feedstocks, and soybean oil was benefited from that package too. So there are really quite a few factors reinforcing the use of the commodity, the soybean oil, in biofuel sector, which we got a big push from the EPA in early in the year and should result in somewhat a higher balance in the US. But it's worth noting that all those regulatory uncertainties that drove prices up in the first quarter have now been resolved.
hmm
So there's already been pretty much well priced by the market. And the takeaway here is there are limiting factors going forward to support new soybean oil hikes, spikes beyond what we already seen, at least looking poorly at supply and demand side in the US biofuel market.
Okay, and actually, can we dig a little deeper into that on the supply side? How is growing soybean production in the Americas shaping the outlook?
Yes, looking at other countries, Brazil is also a major soybean oil producer, and we're expecting record crushing volumes this year. We're coming off a good soybean crop, which will also lead to higher volumes going to crushing, supporting also soy oil production. Soybean oil used here in Brazil for biofuel as well is really relevant, is the dominant feedstock by a wide margin over other inputs. So when you have strong biodiesel demand expectations, you also see higher use of soy oil in the sector. StoneX currently estimates a biodiesel demand growth of 7.1% this year in Brazil, driven by the higher blend mandate of 15% on top of regular diesel and economic growth on the country in 2026. But it's worth mentioning that despite this expected consumption growth, there have been expectations for the blend to be raised to 16%.
Right.
But that scenario is still quite uncertain this year, even with the industry pressure to push it through, because there's no regulatory certainty yet that is actually going to happen in this year. So we are in a different place between Brazil and United States right now, basically. So even though soybean oil demand here in Brazil is expected to grow due to biofuels as well, the pace would be much more contained than what we expect to happen in the US this year. And we're also come from, as I said before, a good soybean crop and solid oil supply. So it contributes to a less stressed Brazilian balance and it ends up putting pressure on Brazil basis, pulling more out of sync what is happening in the US.
Understood. Okay, palm oil, let's talk about that because that has been a bit more mixed. What's driving that divergence compared to soybean oil?
In the beginning of 2026, we came with some more pessimistic factors for palm oil. First, the year started with much higher inventories across both production and consuming countries.
Hmm.
We had a 2025 with a strong palm oil supply, and some major consumers like India ended up shifting parts of their demand to other vegetable oils like soybean oil. And that up the perception of a market that was still with ample supply at the start of the year.
Hmm.
And on top of that, in the main demand growth driver expected to 2026 had been then delayed. And at that point, there was no forecast that would be reintroduced. I'm talking specifically about the increase of biofuel blend mandate in Indonesia to 50%. Currently, this mandate is around 40%. Uh, so the high vegetable oil prices at the time in the beginning of the year led the government in Indonesia to reconsider the implementation. In the contest, there was a real sense that in the palm oil market there was oversupplied, already seen in high stocks with even more positive production prospects in 2026 and with a key demand driver being pushed back. And then with the start of the war in the Middle East in starting March and diesel prices raising, as I mentioned earlier, biofuels became a more attractive option
Hmm.
precisely because of the spike in oil prices. So several countries in Asia, Indonesia and Malaysia, the biggest palm oil producers, started considering higher blend mandates in biodiesel. So Indonesia reconsidering bring back B50, now the 50% blended mandate in the second half of this year. And these measures, taking it all together, should contribute to a tighter global balance in the second half of the year, exactly because part of the output from these major producers would flow back to their domestic markets, limiting export capacity.
Okay. Now, obviously, weather plays a big role for all crops, but this year, particularly El Nino, what big role is it playing when it comes to palm oil supply?
Yes, the risk on climate side is really relevant as we consolidate the perspectives of El Nino from the second half of this year. And it will affect the palm oil production regions, reducing rainfall that could significantly hit plantation productivity because it depends on the heavy rain to have higher yields. So, looking at the last time there was a strong El Nino, the Indonesian production dropped 4.6% year on year
Hmm.
compared to the season before. So this year, Malaysia was already expecting a production decline, and this could be reinforced by the El Nino going forward. And beyond the climate issue, is also worth flagging that the war's impact on production because the conflicts affects oil prices, but
Right.
also the fertilizer market with the recent up in prices of fertilizers, supply constraints due to restrictions of Strait of Hormuz, that could reduce the ability to apply these fertilizers to palm plantations, which would also hit productivity and create a cascading effects on the global production, especially from the second half of this year.
Of course. So, with all of that in mind, how do you see the vegetable oil prices evolving through 2026?
So, as I mentioned before, we can map the oil prices, veg oil prices, in two phases. The one that tells directly from the supply and demand balance from soybean and soy palm oil, but also the oil prices. So, in part of the oil prices is expected continuous volatility because we don't know what's going to happen in the conflict during the next couple of months.
Yep.
So, right now in this moment, the oil prices are helping veg oil prices to go up as well,
Hmm.
but it's a very uncertain point. But trying to discuss the fundamentals on the supply and demand side of soy oil and palm oil, specifically the strong biofuel demand growth, especially in the US, but now in Asia with Malaysia and Indonesia markets, and the weather related supply risks are really points to support the prices in the next couple months, especially. But we also have some bearish constraints like the high palm oil stocks that we already have, we still have in Malaysia, especially, but also in India and China. And in the soybean oil market, although there's expectations of stronger demand in the US, we still see also a strong supply and strong stocks in the US and Brazil as well, Argentina. So there are, on the supply side for soybean oil, there's a more bearish factor. And on the palm oil side, the stocks is still really relevant. But I guess overall, because of the everything that is happening on energy market and their perspectives for the biofuel market as well in these key countries, price will likely remain elevated, especially compared to the really beginning of this year, like January.
Isabela, thank you so much for all your insight and for joining us today from Brazil. And thank you to our viewers for watching. If you want to learn more on what to expect in the commodity world these next few months, I encourage you to visit our platform using the QR code on the screen. See you next time.